Right, ladies and gentlemen, let's get the show on the road. First up is our investment analyst from Phillip Futures, Mr. Woon Tian Yong. He will be discussing Singapore. The focus will be on Singapore. He will discuss the existing developments in the Singapore market, global economic developments, and the Singapore Equity Index performance. He will also briefly touch on the impact of the recent Donald Trump ascension to presidency on Singapore. And following that will be our derivative specialist, David Ng, who will discuss Malaysia, the existing developments, the ringgit, and the equity index performance, the KLCI. All right, so without further ado, let me hand the reins over to Mr. Woon Tian Yong to get the show on the road. Tian Yong, please.
Hi, good evening, everyone. My name is Tian Yong, investment analyst with Phillip Futures. Today, my colleague David and myself will be sharing on themes, drivers, and opportunities in both the Singapore and the Malaysian equity index markets. So for me, today I'll be covering the Singapore equity indices and also possibly futures contracts and how you can get exposed to these tradable opportunities in the Singapore space. However, as with all seminars and webinars go, before I begin, I have to show you this disclaimer slide. So please have a quick read through before we proceed further. All right, I believe that's sufficient time to get a good gist of what the disclaimer slide is about. Before I move on, I'd like to introduce myself properly. Once again, I'm Tian Yong, investment analyst at Phillip Futures, and this is my profile. So do not be misled by the picture on this slide. Although this was taken a few months ago, I believe I've aged significantly since that time due to the workload. I'm just joking. All right, so let's get to the session proper. Today, we'll be talking about four main things. Okay, first, the Singapore equity landscape. Second, I'll introduce you to a few of the Singapore equity indices that are quite popular in the equities and also the futures space. Thirdly, we talk about how we can trade Singapore equity index futures with some examples on the whole process of trading futures as well. And lastly, I'll give a very brief technical outlook on what I think is upcoming in the Singapore space and how I think prices are expected to move in the near term and also the midterm. All right. So without further ado, let's get to the juice of things. First, let's just talk about the Singapore equity landscape. So our stock exchange is known as the SGX, and on the SGX, there are 682 active common stock, REITs, and unit trust issues. Okay, out of which 89% are Singapore incorporated. So while these numbers can be quite big and percentages, we can't really fully appreciate these figures unless we break it down. So in terms of the number of issues, okay, in terms of number of stock issues, industrial goods and services, they dominate in terms of number of stock issues, followed by real estate, construction, technology, so on and so forth. All right, but this can be a misleading number because we can have many stock issues, but another measure of a dominance in the markets is market capitalization, the real actual dollar value weight that we have on the exchange. So in that sense, as you can see, banks, which were not present in the table on the left, suddenly became the third most heavy in terms of market capitalization on the SGX. So we're looking at 16%. First place, we have real estate, followed by industrial goods and services, and then we have the banks. And of course, we have other very famous sectors like your oil and gas, financial services, etc., etc. So looking at this breakdown of the markets, we can see that we can already infer that banks, although there are not many issues, a lot of the weight is placed within a few of the counters on the SGX. We'll get to that later. So in terms of top 50 market capitalization, this is just a very quick list of the 50 heaviest capitalized counters we have on the SGX. We can see a lot of very familiar names here. We have Singtel, Singapore Telecoms, Telecommunications, DBS, OCBC, UOB, Thai Beverage, Hong Kong Land Holdings, so on and so forth. So many familiar names here. Do not worry. We'll talk more about this as we go on in this webinar. So, amongst the large cap, there are a few ways to gain exposure to Singapore's large cap stock counters. Okay, a few ways I'll touch on right now. So, for investors who are looking to gain broad-based exposure to Singapore's large cap stocks, there are basically two indices that you can look at. However, these two indices are more popular amongst different groups of investors. Okay, in the first group, which is probably the more mainstream group, we have the stock investors, ETF investors as well, and on the other hand, we have futures investors. Okay, in the Singapore equity index space, these two groups of investors, they look at two different indices. On the stock side, okay, we're looking at the very popular STI, the Straits Times Index. In the future space, we're looking at the MSCI Singapore Free Index, which is not as well known as the STI, but as we go on in this webinar, you'll see that they are almost exactly the same. Okay, they are not exactly the same, but they're almost there, extremely similar, just that the two indices are the benchmark and reference for different groups of investors. All right, so throughout this webinar, the STI, Straits Times Index, will be tagged with the color blue, while the MSCI Singapore Free, also known as the SIMSCI, will be tagged with the color green. So introducing Singapore's sister indices, which is the STI and the SIMSCI. On this chart, you can see that the blue line, the STI, shares a very high correlation with the green line, which is the SIMSCI. At the bottom of the chart, you can see a correlation chart. It is close to 1. So when it comes to correlations, it can range from a -1, 0 to 0, all the way to 1. 1 being 1 with a figure of 1 showing a perfect correlation. Okay, so a reading of 0.96 or 0.97 in terms of correlation signifies a very strong tandem movements between the two indices, meaning to say they are very closely related. Their price movements almost perfectly mirror each other. All right, just that the two indices are meant as a benchmark for different groups of investors. All right, yeah, check out those correlations. Isn't it amazing? All right, that's all right. Let's move on from this. Okay, so back to this top 50 market capitalization on the SGX. Okay, on this table here, it is the same list as the one you saw earlier, but I'd just like to orientate you to the color coding. So at the bottom, there's a legend with the light blue. Okay, any cell shaded in the light blue shows a constituent of the Straits Times Index. Any cell shaded with a light green shows a constituent of a SIMSCI index. And with this weird mix between blue and green, okay, it shows an overlapping constituent. So let's take a look at the STI constituents. Okay, so these are the constituents of the STI. Okay, now I'm going to overlay the constituents of the SIMSCI index, which is the MSCI Singapore Free. And you can already see their constituent, their composition is almost the same, with the exception of a few counters. So you can see here, the STI has 30 constituents, while the SIMSCI has 27. All right, so the key difference in the constituents will be Jardine Medicine Holdings, Thai Beverage, Hong Kong Land, SI Engineering, which is in the SIMSCI but not in, which is in the STI but not the SIMSCI. While on the other hand, you have your Suntec REITs, which is in the SIMSCI but not the STI. All right, when it comes to industry weights, the breakdown, as you can see from the weights here, they're largely similar. Very little difference in the weightings. Both indices have a very heavy weight on your financials. To be more exact, on the banks. Okay, the banks take up a very big and sizable portion of both indices. So it is safe to say that anything that is expected to move the banks will have an impact on the index price movements as well. So it's a very financial heavy index for both the STI and the SIMSCI. Okay, there's not much of a difference between the two indices when it comes to the weights. Okay, when it comes to top 10 constituent weights, we are seeing a very similar observation here. Top 4 holdings, okay, your 3 big banks and your Singapore Telecommunications, the weights do not vary by a lot. But for the SIMSCI, it does not have Jardine Medicine Holdings, Hong Kong Land, and even Thai Beverage, which is why you see a relatively higher weight assigned to the other top 10 constituents of the STI due to the absence of these other counters in the SIMSCI. But all in all, they still display very similar proportion and distribution of weights when it comes to constituents. So when it comes to Singapore equity indices, be it the STI or SIMSCI, I'm just going to talk about both of them at the same time since they are so closely related in price movements and they're almost similar, almost identical. Okay, there are 3 things that I've come up with for this webinar. Okay, first, when it comes to Singapore equity indices, we have to look at US market sentiment as they tend to spill over into the morning session for the Singapore trading period. So whatever happens the previous day or night in the US markets often has a spillover effect on the Singapore markets, especially during the opening hours. But it is not often that you see the closing price action in the Singapore market spill over to the US markets unless they impact the US space, unless they originate from US space. So secondly, domestically, we also have to watch for the earnings season, and especially the earnings of the three big banks like your UOB, OCBC, and DBS. And lastly, we have to look at domestic economy and policy. So this webinar is extremely timely because for those market participants and investors, you do know that the first reading, GDP reading for 2017 Singapore is due tomorrow morning, and it is also widely expected for the MAS to release their monetary policy statement tomorrow as well. So by being educated today, you might be better equipped to understand the happenings that are going on tomorrow. Tomorrow is a crucial day for investors in the Singapore space. We'll talk more about that later. But first, let's talk about the US. Okay. So when it comes to the Singapore Equity Index correlation with other indices worldwide, we have your S&P, Dow Jones. In Europe, we have like your FTSE 100, Euro Stoxx 50. In China, we have Hang Seng, and other Asia, Japan, like Nikkei 225, Kospi 200 in Korea. Okay, these are the correlations of the STI, Straits Times Index, and the SIMSCI with these other indices. So as I mentioned earlier, a reading of 0 indicates absolutely no returns correlation between the STI, SIMSCI, and the other indices, while a reading of 1.00 indicates a perfect correlation. And in this table here, the greener the cells, the higher the correlation. So if the cell is white or close to white, you would expect that there's not much correlation between the price movements of the two indices. So over here, obviously, the Straits Times Index shares a perfect correlation with itself. Same with the SIMSCI, with itself as well. But the correlation between the Straits Times Index and the SIMSCI is close to 1, near perfect correlations. And you can also see that the correlation shared between the SIMSCI and the STI with Asian indices is relatively high, Greater China and other Asia. But there's something really curious because I mentioned earlier that US price movements actually drive Singapore Equity Index price movements in the morning. But in this table here, we are seeing a close to 0, a low correlation, 0.25, 0.26. So while what I said earlier still stands true, correlation figures are not everything. They can be misleading. So do not be misled by these low correlations because these returns are for the same trading day. Whereas what I said earlier is, night movements tend to drive morning movements in the night movements in the US markets tend to drive morning movements in the Singapore markets, which may be why there's a lagged indicator here. There's a lagging involved in terms of the correlations, which is not factored into this table. All right. So based on price charts, later we can see how the US markets can drive Singapore equity prices. So the US sentiment factor is very important. On this chart, the red line represents the STI, whereas the blue line represents the S&P 500. There are a few points of major market moves in the S&P 500 on this chart. I'll highlight them and show you how positive US sentiment could possibly be one of the key drivers in keeping our equity markets price movements upwards. So over here, you have Donald Trump being very quick to act with signing of executive orders. You see a spike up in the S&P 500 and followed by a continued rally in the Straits Times Index. Next, we have Donald Trump hinting at tax plans. Okay, but until now we haven't seen anything yet. But at a point in time, markets were getting so excited over this thing because they were thinking finally it's here, it's not here yet, but that's what they were thinking back then. The STI also continued to go up. However, once we saw some major dampeners in the US markets, like over here, the third gray bar, okay, once there were doubts mounting over Trump's tax plans, whether or not he's able to deliver, okay, once we saw the US markets lose steam, we saw the STI losing steam as well. Okay, so you can see how sentiment in the US supports price movements in the markets in Singapore as well. So while correlations are not high, okay, the sentiment in the US is still extremely important in determining whether or not we can see continued upward price action for the STI and the SIMSKI in this, especially during this context. So key events in the US space, I just want to touch briefly on these things. First, there are three main things we should look at in the US space. First, economic data releases. Secondly, US Federal Reserve. And lastly, of course, the US President Donald Trump. On the economic data front, one thing we have to look at will be, two things we have to look at is the labor market and inflation data. Because these two things, they drive the decision-making process of the US Federal Reserve. So while the labor market has been showing quite a solid and robust and consistent story of a recovery, with the exception of the latest non-farm payrolls figure of 98,000, and inflation price trends have been slowly creeping up, okay, we still have to watch if these trends continue or if they're coming to a stall. Because these factors, number one, they drive sentiment in the US markets, and number two, they also indicate the relative hawkishness and dovishness of the US Federal Reserve. So on the US Federal Reserve front, we have to watch for speeches by Federal Reserve officials, FOMC interest rate meetings, and releases like meeting minutes and summary of economic projections. So the next two meetings to watch will be the one in May and June. At present, the markets, federal funds futures markets are pricing in more likely than not the probability to the June meeting, meaning to say at present they're looking at June meeting, but as with the March meeting, anything can happen, so keep your eyes peeled for the May meeting as well. And lastly, we have to look at the US President Donald Trump. At present, he still has yet to deliver on his tax reforms and infrastructure spending. All of us have been conveniently distracted by the recent missile attacks on Syria, but let's watch if all these fiscal stimulus plans will still come to fruition in the future. Okay, next, in the domestic earnings releases space, we also have to watch out for the earnings season of the STI and the SIMSKI. All right, for these two indices, the general time period of earnings releases are as such. For Q1, we're looking at mid-April to May. Oh wait, that's right about now. All right, so we are entering the earnings season. In fact, if I remember correctly, there's one earnings release scheduled for release today, and that signals the start of Q1 2017 earnings season. So during this time period, broad-based macro price drivers tend to take a relative backseat, and we may see more constituent-driven price action during this period. So you can see the index being pushed about left, right, center from individual earnings releases. However, key thing to watch is the big banks. Due to the relatively heavier weights that these three banks have collectively on the respective indices like the STI and the SIMSKI, their earnings releases are keenly eyed. So watch for sector-related moves and sector-related trends when it comes to earnings, as markets may move in anticipation of these developments as well. So while all this is very vague, I think it will be useful to have a quick earnings calendar. I've prepared an earnings calendar for the upcoming earnings season. Okay, you can take a quick look. On the 28th of April, towards the end of this month to early May, we will start to see banking earnings releases. All right, and the table continues here. So expect the end of April to early May to be a crucial period, as major earnings releases from the three banks are scheduled for release. And lastly, I want to talk about domestic economy and policy, which may be more timely tonight as we are looking to GDP data releases and MAS policy review tomorrow. So let's take a quick recap on the Singaporean economy. In the GDP space, we're seeing quite a positive pickup at 12.3% from a negative growth the previous quarter. So remember a time last year when everyone was worried of a technical recession. A technical recession is basically 2 consecutive quarters of negative quarterly GDP growth. Thank goodness we averted that, but it is not over yet. Because at present, Reuters survey estimates they put flash Q1 2017 quarter-on-quarter GDP growth to be at negative 1.9%. So if this materializes, we may be thrown back to the same times we saw last year, where everyone was starting to worry whether or not we are seeing a technical recession. But based on my view, I don't think that's extremely likely. But we have to wait and see the data release tomorrow morning. So next indicator we can look at is year-on-year non-oil exports. So on this chart here, the blue line shows the actual data reading. The green lines are a 10-period moving average. Okay, so in a way, the green lines moves out the volatility of the blue line and gives a more slow moving but more broad, indicating trend of how these non-oil exports growth have been moving. So when you look at the green line, it indicates a gradual pickup in NODX growth. Okay, so non-oil exports are also known as NODX. So NODX growth has been picking up and it has entered into the positive region once again, following a very stubborn period of negative growth in the previous year. And lastly, CPI, another measure, prices are also on an uptrend. Inflation seems to be picking up. Watch for this release later. Okay, but this is not slated for release tomorrow. Okay, but watch this space as well. Okay, so while the GDP figure might be quite important to look at, I think that another thing which is as important, if not more important to look at, will be the MES monetary policy review, slated for release tomorrow. So there's a lot of expectation that the MES will come forward tomorrow and release its monetary policy statement. Back in 2016, given the very depressing economic figures that we have seen last year, there was a lot of talk about the MES possibly introducing an easing of policy this year in April. However, in the light of the recent data readings of data, I think that the Singapore economy is starting to show initial signs of stabilization and pickup. And as a result, my view is that I really don't think that the MES would change the slope with or level of its policy band during this review. If there's going to be any hawkishness or dovishness, I foresee that maybe the October review is one to watch. But given the current trend of things, I'm more inclined towards hawkishness than dovishness. But then again, anything can happen. Do not be surprised if things do not turn out as I mentioned earlier. Okay, so while there's been quite a lot of expectation that nothing much is going to change with regards to policy stance by the MES, other things to watch out for from this statement would be the MES release of its economic outlook and also clues on future policy action, because markets are expected to act on this news as well. All right, so watch this. So just to do a quick recap, when it comes to broad-based exposure to Singapore's large-cap stocks, there are two indices we can look at. Amongst the stocks and ETF investors, we can look at the STI, whereas for futures players, we can look at the SIMSCI, which is the MSCI Singapore Free. But then again, many people are not very familiar with futures, which is why I'm here today. I want to share a bit on why futures contracts can be a valuable proposition to your overall portfolio. All right, so first, futures contracts, for those suitable investors, okay, futures contracts, they involve leverage, all right, meaning to say that you only require a fraction of the actual exposure you are getting to trade the contracts. So I have to give a disclaimer here. In this sense, leverage means that both your profits and losses are amplified. Secondly, futures contracts are highly liquid, especially when we are talking about the Singapore futures contracts, the SIMSCI contracts. Liquidity for the active contracts is usually very high. All right, with regards to open interest and daily traded volume is high. So worries of not being able to find a buyer for your short position or a seller for your long position to be the counterparty to your position is not expected to be something that's going to be on your mind for extended periods of time. So next, okay, with regards to tracking and trading hours, okay, futures contracts, a lot of them, they trade almost 24 hours a day on trading days, which means that even when the cash market, even when the STI has stopped trading, stopped its price feed for the day, you can expect futures contracts on the SIMSCI to go on, continue trading. So it means that you can actually trade your views almost any time, and very close tracking between the futures contract and the actual index with low tracking error means that, when you look at the cash index, you can have a very good idea on how the futures contracts are trading as well. And lastly, something that futures contracts can do that you can't conventionally do with stocks is short selling. So when it comes to futures contracts, you can formulate your view in both a long and a short position. So it can be either bearish or bullish. Okay, you don't have to be bullish all the time. If you feel that something is going to come down, you still can potentially profit from such short positions as well. So when it comes to the SIMSCI, MSCI Singapore Free Index Futures, these are the contract specifications. So whatever the SIMSCI index is, okay, the exposure you're getting is 100 Sing dollars multiplied by that. And the minimum price fluctuation is 0.05 index points. So at any one time, okay, you can see 2 nearest 0 months and 4 quarterly months contracts being traded at any one time, meaning to say that you will see 6 contracts traded at any one time on the SIMSCI. So when it comes to trading hours, remember that I mentioned earlier that you can trade almost 24 hours a day. For futures contracts, it's split into 2 sessions. Okay, the first session is a T session. Okay, we're looking at 8:30 a.m. to 5:10 p.m., which is very similar to how the timing of the STI. But post that session, okay, from 5:40 p.m. to 4:45 a.m., it's called a T+1 session. You still can trade during these sessions if you desire. All right. So these are just a few more bits of information on the contracts. You can have a quick read through. But what I really want to share with you today is that with Phillip Futures at present, okay, the initial margin per contract is Singapore dollars 1,200, meaning to say to trade one contract you require $1,200. All right, which is, in my opinion, is not exorbitant, not extremely huge. It's a very rather divisible. Okay, so let me just show you the effects of leverage and the kind of potential profits that we can make from trading futures through this trade example. So this is an example for illustration purposes only. It's not a trading call. So in this scenario, okay, it's just 7th of April, few days back. For those who have been reading the news, I'm sure we all are more or less in the know that the US launched a missile attack on Syria on the 7th of April. So on the morning of the attack, we saw global equity indices worldwide and futures contracts on indices which are not trading at the present moment, like your E-mini S&P 500 futures, okay, with the cash index closed, futures were still trading. They all exhibited the same kind of downward price movements from 9:30 onwards. So as you can see here, using my mouse, I'm pointing it out to you. Okay, this is the downward price action. So for those technical, people who are more familiar with technical analysis, based on the RSI, the index, the futures contract ventured into oversold levels. So when it comes to RSI, when something ventures in an oversold level, sometimes it can be an indicator to show that things might just reverse soon. So in this trade example, okay, the SIMSCI April 2017 futures contract ventured into grossly oversold levels following the news of the US missile attack on Syria. So as an investor, I decided to go long on this market knee-jerk reaction with the view that no, this downward price action is not going to last, just a knee-jerk reaction. Everything is going to be fine at the end of the day. So in this trade example, I entered into a long position at the price of 344.85. Okay, and I held on to this long position until the RSI showed overbought levels, which is at 348.3. So my entry price was at 344.85. My exit price was at 348.3. So look at the price difference. It's just maybe 3 points, close to 4 points of index price movements. Nothing exceptionally significant, but the impacts of leverage can amplify my profits in this example. So in the P&L, profit and loss calculation from this example, the position I took out was just one long position in the April 2017 SIMSCI contract. My entry price was 344.85, exit price was at 348.3. Okay, my profit, okay, was actually 100 Singapore dollars multiplied by the difference between the two prices, and after accounting for commissions, this is my profit. Okay, 325 Singapore dollars. But remember, the initial margin that I put up per contract was $1,200 Singapore dollars. So on a percentage basis, just from all in a day's work, okay, I made 27.08% after electronic trading commissions. Okay, that's quite a sizable return for a one-day trade. So this is the impact of leverage. Okay, I must say again, it can go both ways. While your profits can be amplified, your losses may be amplified as well. But for those who have the relevant risk appetite and are suitable, okay, just look at the kinds of potential profits that can be made from a trade like that. Okay, if you did the exact same thing as I did. Okay. So on to the next point. Okay, in the aspect of futures, I want to talk about SIMSKI. You can apply this to the STI as well, but you got to change the levels to the same kind to the ones that apply to the STI. For the SIMSKI short term, like I mentioned, we are at a crossroads right now. Tomorrow, markets have been rather cautious this week, trading sideways for most of this week, sideways to downwards. Not much significant price movements. All right, primarily because of number one, the GDP results due tomorrow. Number two, MES policy statement, and number three, mounting U.S.-North Korea geopolitical tensions. So in my view, I expect sideways action, okay, between the green line, which is the 2-hour 100 SMA, and the immediate resistance of 350.2 to persist until in the absence of any surprises. All right. So to adopt a more long-term and broader view, okay, in the midterm, this is a daily chart span across about half a year. Okay, in the broader term of things, although we have seen quite a strong rally in the Singapore equity space since the start of the year, based on the RSI and price action, we are seeing a divergent trend. So on one end, you're seeing the index rallying going upwards, while on the other end, the RSI has been showing a downward trend. So when we see RSI divergence from price trends, it signals that the current trend may be losing steam. So the upward trend may be limited for now. We need some consolidation or some correction, okay, before any fundamental upward rally can continue. But of course, besides technicals, we have to look at fundamentals and sentiment. We have to look for cues from the releases tomorrow, and we have to see how things pan out in the geopolitical space between the US, North Korea, China, and Syria. So another thing to watch outside of Singapore will be this Saturday. So it's someone's birthday this Saturday. Okay, someone very important to the North Koreans. Okay, so the North Korean founder's 105th birthday. Okay, 105th birthday is going to be celebrated this Saturday. Why is this birthday important? Because we have to watch for what they are going to do during these celebrations. It is almost tradition that they conduct nuclear tests during this time. All right, so if they manage to do that in the context of all the mounting tensions after the Trump and Xi Jinping meeting and all the angry rhetoric between the two parties, the US and North Korea, if they do that, we might see further escalation, but it might be diffused. So that's another thing to look at now. All right, so in the broader view of things, Singapore equity indices might proceed to transition to a sideways to a slightly downwards trend before any fundamental or sentimental drivers continue to push it upwards. But once you see price action cross below the 20-day SMA and proceed to test the 100-day SMA, we're looking at downward actions. And if you want to trade this so-called retracement, okay, from its previous uptrend, okay, you can do that using futures by taking up a short position. Okay, but this is not a trade recommendation. I'm just sharing my views here. All right. So to wrap up today, in my segment, I've covered quite a few things. Okay, first we share about the Singapore equity landscape, the issues breakdown, the market capitalization breakdown, and also top 50 market cap counters on the SGX. And next we talk about Singapore equity indices, which is the STI Straits Times Index versus the SIMSKI, the MSCI Singapore Free, and how different things drive the index price movements. And thirdly, we talked a bit on the futures contracts, the advantages, disadvantages of futures contracts, contract specifications for the SIMSKI futures, and also a trade example to show the effects of leverage using futures contracts. And lastly, I shared my short-term and mid-term technical outlook for the SIMSKI. So that's basically it for my segment. If you have any questions, you can feel free to ask. I'll be happy to take them. And once again, I'd like to reintroduce myself. My name is Tian Yong. Remember, the face is much older now. And before I pass on to our next speaker, let's just run through a few questions.
We do have a few questions for Tian Yong. You do feel free to type them in the question box. We have some questions on hand. Tian Yong?
So will the speaker share about the Malaysian indices and futures as well? This is by one of our participants here. I will not be sharing on Malaysian equity indices and futures, but my colleague David, who is very specialized in this field, will be able to do so. All right, so another question, can you explain the effects of rate hikes on over the space of REITs? I'm not at liberty to discuss REITs because it's not within my license to do so, but I'll just say that, you know, rate hikes tend to increase the yield on various income-paying asset classes. That's all I'm going to say. And what platform to access futures contracts? On that, we have our in-house platform, okay, which is Poems 2.0. Okay, that is one of the more popular platforms that our customers use to trade futures contracts. All right. So any opinion on oil and gold impact for STI? Any correlation? Let me just take this one quickly. So when it comes to oil, the first thing that comes to my mind would be the oil and gas industry. So crude oil price movements do have an impact on the oil and gas constituent stocks, meaning to say they share a very strong positive correlation. If crude oil prices increase, you can see more often than not, you'll see a sector-based, sector broad-based movement upwards as well and downwards as well. So in the crude oil space, a lot of factors are at play. On one hand, you have your OPEC very dutifully sticking to their output cuts. On the other hand, you have the US picking up on their production and inventories. So recent Baker Hughes rig counts are showing an upward pickup, while at the same time inventories have been, the US inventories have been showing quite a lot of consolidation as well. So these two conflicting drivers may result in a sideways trend for the crude oil prices. But as of even more recently, we saw the US missile attack in Syria and some supply side disruptions in Libya. So all these tensions and disruptions also add to upward price action for crude oil. So all these things recently has been more bullish than not, crude oil, and if you look at the charts, you can see your oil and gas sector stocks move up as well. So oil has a very lasting impact. Oil has a very real impact on the oil and gas sector, and that in turn drives the STI. So on the gold front, gold is a different beast altogether, I would say. So gold has been spiking up after the Syrian missile attack as well, but the gold and STI correlation is not as strong. All right, so gold is an indicator of sentiment, can be one indicator of sentiment. Watch for that. But sometimes when gold spikes up on all these tensions, you may see the STI fall as well because they have the same driver of uncertainty. All right. So another question we have is the impact of the FOMC meetings results on the futures market. So with regards to this FOMC meetings results, they usually occur late in the night. All right. So more often than not, these markets are already closed. In fact, almost always, Singapore STI markets are always closed, which is why some investors prefer to trade in futures because they are still live and trading during the exact moments of these releases. So you can actually capitalize on the long trading hours to gain exposure, okay, directly or indirectly to these FOMC meeting results. Generally speaking, high interest rates does well for banks only if their loan holders have the credibility and robust liquidity to absorb the increased financing costs. So in a way, with the very bank-heavy STI and SIMSKI indices and futures contracts on the SIMSKI, you can expect drivers of price movements from FOMC meetings results. So we can look at the May meeting or even the June meeting, and in between you can look at the US Federal Reserve official speeches, whether or not they lean towards hawkishness or dovishness. All right, so if you have any further questions, you can post them in the questions chat box. Towards the end of the seminar, David and I will be collectively tackling these queries that you have. But for now, I would really love to hand over to the next speaker, and I believe Sri will tell you more about my awesome colleague David, who's going to share with you on Malaysian equity indices and futures contracts on them. Sri, please.
All right, that was Woon Tian Yong from our investment analyst from Phillip Futures, Singapore. Next up, we have our dear friend David Ng, our very close friend, and also derivative specialist for Phillip Futures. Without further ado, let's bring on David. David, can we have you?
Yep, hi Sri. I'm just trying to share my screen here. So, hi Sri, can you see my screen?
Yes, I see, David. Over to you now.
Okay, thank you, Sri, and thank you, Tian Yong, my wonderful colleague. Just before I start, I'd just like to clarify that, I do not have any asymmetric hair like Tian Yong. I wish I have. So yeah, let's get into business. I think on my part, I'll cover basically the Malaysia chapter. So what I'm going to touch about today is mainly talking about the performance of the Malaysian market, at least for the first quarter. And with reference to the KLCI index, obviously in some of my slides and example, I'll be mainly touching on the futures. And I'm just going to talk about some of the relationship between the KLCI index futures together with crude oil and other significant factors like the Ringgit Malaysia. And another important area which I'd like to cover is in terms of seasonality of the KLCI. And I'd just like to show you some of the technical outlooks that where do we see KLCI is heading to for the rest of the year. And last but not least, I'm just going to touch a little bit on the Kuala Lumpur Composite Index Futures, which is quite a pioneer product for Bursa Malaysia, besides the crude palm oil futures. Now, let's start by just looking through the Malaysia economy. I think clearly Malaysia had a major impact late last year. We have seen how the KLCI index performance has plunged from at least 1,700 points to the low of 1,600 points. We have recovered since then. I think the major driver that actually lifted up the uptrend is mainly on the global trade growth. We can clearly see some of the numbers coming from the global PMI numbers are quite positive, and Malaysia is in effect taking a bit of that positivity. So you can see from the chart here, I think clearly Malaysia has clearly recovered for at least the last quarter last year and first quarter this year. I think it's been China has also reported a very strong growth. So with these two major economies, I think it's pushing Malaysia and the rest of other regions in this region above positive territory. Now, just touching on Malaysia perspective, other than improving trades, we also clearly see that inflation has also rose quite significantly for the past couple of months. We just look at the CPI numbers. They have surged from 4.5% back in February. It was 3.2% in Jan. By the way, this is headline inflation numbers. If you just look at local necessity good items in terms of those prices, the inflation numbers are way higher. But if you just look at headline inflation, it's clearly painting a very upward picture. That means inflation is kicking in a lot of sectors. The major sectors are mainly in terms of transport. Since the uplift of fuel subsidies by the government, we have adjusted our price from a monthly basis to weekly basis, and I think that actually inputted a lot of cost pressure for a lot of manufacturers, not only manufacturers but also consumer in general. So therefore, I think inflation remains a key topic in terms of the Malaysia economy, and it definitely be a pressure on how the central bank is going to move or maneuver its monetary policy. Now, inflation aside, I think just a couple of days ago, we have just seen production numbers to be officially released by the central bank. The figures looks tremendously well, and it's gel with the overall recovery theme that we are seeing across major countries, especially in US as well as in China. I think this is pretty much in line, but the key thing to note is that the sectors that's recovering in Malaysia is mainly the manufacturing, and the electricity output is mainly in terms of semicon industry. So these two major industries are picking up very robust. The rest of other sectors within the economy still recorded a moderate growth. We don't see much activity picking up since a couple of months back. So closely to watch is how the rest of other sectors within the economy is going to perform for the rest of the year. So these two major key drivers are mainly in terms of the manufacturing sectors as well as the semicon industry. Okay, I think what in other factors that's also lifting up the Malaysia economy is also the domestic demand. Although inflation is high, headline inflation is high, but we have seen domestic demand to be quite resilient on the back of a slower economic environment. I think this is also boosted by public spending and obviously to a certain extent private investments. Now, moving on to Malaysia government bonds. I think Malaysia government bonds paints a very interesting picture. We have seen a huge accumulation of foreign holdings in terms of Malaysia MGS, which is the Malaysia government securities. And if you can see from this chart, we have shown you the percentages as well as the total quantity holdings of the Malaysia government bonds. It reached its peak, I think, in mid of last year, where it started to decline. I think we've just seen official numbers from the government. Clearly, you have seen foreigners has been selling the MGS quite heavily for the past couple of months, and therefore we can see ringgit to actually weaken for the, from the previous past few months. So I think foreign holdings for MGS continue to be quite elevated at the moment. I think given that this kind of scenario moving forward, we still see pressure for foreigners to keep selling the Malaysia government bonds, and this will in fact put added pressure on the Malaysia ringgit moving forward. We have two new government auctions coming later part of this year, probably in the third and fourth quarter, and I think some of those later bonds will mature by that time, and we should see some foreigners to be selling off the Malaysia government securities, and in that case, ringgit will definitely be under pressure. Now, so that's on the bond picture from the side of the foreigners. But if you look at the equity space, it paints a very different picture. If you just look at foreign holdings in the equities market, especially in Malaysia, for the past couple of months, it has actually been on the rise, and it's actually a significant rise. If you just look at the cumulative net inflow from the foreigners' perspective, it's actually been an inflow for the past, if I'm not mistaken, 16 days. So it's quite an interesting environment. It seems that foreigners are picking up the Malaysia equity market. We are seeing some of the top counters, especially the big cap counters in the KLCI index, to actually go on the uptrend, given that the foreigners are coming back into the market to purchase some of these counters. And therefore, KLCI index itself has actually climbed up from above the 1,700 level and trying to reach the 1,800 psychological level. I think this is a very good, strong momentum, and we reckon that the foreign equities holding will continue to climb, given that we have a weaker ringgit, and I think sentiments across Malaysia overall may not be that bad after all. Okay, now comes to real GDP. In terms of Malaysia real GDP, I think this year we forecast a slower growth, given that on the back of the global economy, although it's recovering, but I think sentiments still remain very cautious. Same goes for Malaysia. We have both internal and external shocks, which we reckon is going to be a risk, which I will explain later on. So we are projecting that Malaysia GDP this year to average about between the region of 4.1% to 4.5%. I think these are pretty good, healthy figures after all. And what will support the GDP figures are mainly on the private consumption, and we should see a bit of private investment capital coming in. Now, on inflation, that will be a different picture. Last year, we had faced a lower inflation, on average about 2.5%. But I think since then, crude oil prices did take up a strong rally. So this year, we are expecting inflation in Malaysia to average on between 3.3% to 3.5% on yearly average. So we are facing slower economic growth and higher inflation. There's definitely going to be a challenge for how the central bank is going to maneuver its monetary policy moving forward. Now, besides crude oil being a major driver of the Malaysia economy, palm oil is also very significant in terms of its contribution to the Malaysia economy. We have clearly seen palm oil prices to recover from the low of 2,000 ringgit per metric ton. Now it's currently doing on an average about 2,600 to 2,700 ringgit per metric ton. So it seems it's a very good recovery, and it do benefit the plantation sector overall. So I think in general, we are looking at palm oil prices to actually give a bit of support to the Malaysia economy as well, besides crude oil. So moving on to relationship between the KLCI market and some other significant factors. One of it is actually crude oil. If you just look at how Malaysia economy is so reliant on crude oil prices, you can clearly see from the chart, the red color is actually indicating the KLCI index, and the green color is the WTI prices. So you can clearly see a very close, nice relationship between both the lines. And I think in recent times, the correlation is actually getting stronger. So I think KLCI index performance is quite heavily reliant on the crude oil performance in general. Now moving on to ringgit, relationship between the KLCI and ringgit, this could be a different picture. If you just look at back in 2014 and 2015, you can clearly see both the lines are moving inversely, which means that when you have a stronger currency, your KLCI would tend to do better, and vice versa. But if you just look at just recent times, late 2016 or early 2017, you can clearly see both the direction for in ringgit and KLCI is actually in tandem. So this is quite peculiar in nature. I think this is suggesting that ringgit Malaysia is overreacted to its own fundamentals, and it's not following to the KLCI performance, and KLCI performance also reacting to its own performance. So clearly the ringgit and KLCI relationship may actually be, in the short term, may not exist, but on the longer run it should play a role again. Now a lot of people will mention that KLCI has a very close relationship between the, Dow Jones. If you just look at the chart here, which I just showed you, the red color is basically the Dow Jones index, and the blue color is actually your KLCI index. You can clearly see they are quite parallel. Just that in recent times the gap gets wider, but the overall trend remains the same. Whenever Dow Jones is on an uptrend, KLCI would tend to have that same tendency. The question is, I think the gaps will get a bit wider, but the overall trend remains the same. So if you are trading on a KLCI index and you are trying to anticipate where the KLCI is going to go in, in the future, as a reference, you can always use Dow Jones as a possible benchmark to track the likely movement for KLCI. Here, what I did is basically to compare the cash market of KLCI, which is the spot market, against the futures market, the KLCI index futures, which is listed under Bursa Malaysia derivatives, and you are able to trade via Phillip futures. So you can clearly see the difference between both, as we call it, a spread basis, and there's a sharp increase back in 2015, but on average it should do between 10 to minus 10 points. So whenever there's a big discrepancy between both the markets, it's actually suggesting an opportunity in either markets. We usually don't see the kind of spread to last very long. In fact, once we see this kind of spread, it's actually an opportunity in either markets. So clearly we can see the spreads in recent times is actually quite volatile. We have seen how the futures market reacting quite premium to the cash market, which means the sentiment of the current KLCI market is actually quite bullish, even though the cash market doesn't seem to track along, but futures market is actually already moving. So with this kind of spread that we are seeing in the market, is actually signaling to the market participant there's potential sentiment in play in the future. Okay, now back to risks, both external and internal risks that we foresee in the Malaysia market. External risk, I think, is clear enough. I think Tian Yong has presented a very well comprehensive risk that is global risk that is actually happening. Definitely, we are well aware what Trump anti-trade policies are. We are not sure what the impact is going to have, but definitely Malaysia is not protected from such a risk, and it's very vulnerable. So I think clearly we have to watch out on external risk, especially from Trump administration. Other than that, I think the Euro region remains a very strong risk for this year, especially with the elections coming around. Obviously, for Malaysia's side, we are all hoping when will the elections be. Of course, the deadline will be due next year, but sentiments are playing part. Possible that Malaysia election will probably be the later part of this year. So again, like every other elections prior to every other elections, the KLCI market would have a rally. So the question is, how far can the market go? Okay, so I think on domestic fund Malaysia, we have to watch out definitely on the election risk. So just coming to the last part of the presentation, which I'm going to cover on the technical side of things. So you can clearly see KLCI has done tremendously well. We started of the year at the low of 1,006 in just it's just a short span of 3 months. We've recovered almost more than 120 points on the index. Right now we are doing about 1740 on index. We hit a high back in, just this year high was at 1754. So possibly we are looking at to retest the high level and probably to retest the psychological level of 1,008 in the next couple of months. Keeping in mind that we have an election play, we might have an election play. It's just a matter of question, when will the election be? Now, just as I highlight in the earlier agenda, I'll be touching on the KLCI index futures. So just to introduce to those who are not familiar with the KLCI index futures, first of all, it's listed under Bursa Malaysia derivatives exchange, and the index point is 1 point is equivalent to 50 ringgit. So it moves every 0.5, half a tick. And just to take note, the trading sessions are from 8:45 a.m. to 12:45 p.m. for the first session. Second session starts at 2:30 p.m. to 5:15 p.m. Okay, and just for the contract specs, we have 4 contract months: March, June, September, and December. Okay. And just to for the viewers' information, the margins to trade on KLCI starts from 4,000 ringgit. So if you are an equity trader and you want to get exposure in Malaysia, one of the key markets that you can always go is to go into the equities market. But to go into the equities market, you always have a hassle to think that which stock in particular will be good enough or will capture that kind of rally that you see in the index. To save all those trouble, why not I suggest the viewers to go into the futures market, because just 4,000 you get an exposure of 30 stocks in the index. You don't have to buy each of them individually if you are looking to ride on the rally of the index. So as simple as just taking 4,000 ringgit and just get a futures contract. Okay, you can also, like what Tian Yong mentioned, futures is a flexible instrument. You can always short sell the market. If you're thinking after election, probably the index may correct, then there's a good opportunity, a good window for you to short the market. Okay, so I'm just going to cover a bit on seasonality. Unlike commodities, indices seasonality is very hard to assess because indices runs on the longer term trend. Commodities runs in cycle. If you just look at palm oil, you can clearly see which are the weak months and which are the strong months. It's not so clear in index, but KLCI index is a bit peculiar in nature. You can clearly see certain months that are very strong. So if you just look at this chart that I have here, green months are basically periods where month to month they are actually positive, and if you look at the red periods are month to month negative. So if you just look at the chart alone, you can clearly see that December and possibly March or even October are periods of strong months in the KLCI. Weak months in KLCI is indicated by the red color, a lot of red boxes. It's usually in May and August. Okay, June is also considered quite a good month for the KLCI. So let's see whether this year will the same pattern repeat again in terms of the seasonality of KLCI. Anyway, this data is based on 15 years. So let's see whether the pattern repeats itself. So coming back to the end, the conclusion. I think you just look at how, first of all, the global economy is playing out and how Malaysia internal economy is playing out. It looks like that the key thing to watch out in terms of the Malaysia space is definitely going to be the election. So if investors want to take an opportunity or speculators want to take the opportunity in Malaysia market, you have to watch out the election risk. And we believe in, like prior to every election year, KLCI index will definitely have a rally. So let's see how different this election is going to be. But again, we are slowly seeing that the KLCI index is actually trying to gain a bit of support and is trying to hit to the 1,800 points psychological resistance. So if it does break that, there will be another new rally for the KLCI overall. Okay, I think keeping in mind overall Malaysia equity space is really riding on the political team. You can see some of the big counterweights are already started to move in light of the foreigners buying into the equity space, as well as also in light with other regional developments, especially with the US Dow Jones. But however, just like any other markets, we are still vulnerable to external shocks. So just like what Tian Yong mentioned, this weekend we are celebrating a very huge birthday. So let's see what will happen after this weekend. Okay, so in light of such volatility, I think it's a great advantage to capture such volatility using the futures market. And like I mentioned, it saves you a lot of time. It's a liquid market, and most important, you can always do both sides of the market. You can either buy, you can also short the market. Okay, with that, I think I'll pass it to Sri.
All right, thank you so much, David, for covering the themes, drivers, and opportunities in the Malaysian market. Just like Tian Yong before him, They both shared they covered the themes, drivers, and opportunities for both Singapore and Malaysia, and they also shared the benefits and opportunities, benefits and advantages of trading the index as opposed to individual stocks. I mean, there's no hassle of having to analyze every single stock to see where which ones are promising. You can just trade the index instead. And also, for both these indices, if you like to trade them or gain exposure to these two unique markets, look no further than Phillip Futures. David, we do have some questions on hand. Would you like to take them before we call or end the session proper?
Yeah, sure. Probably I just take a couple of questions. I do see some questions here posted. So I'm just going to read out some questions and probably answer it. I think there's one question regarding foreign selling on bond market, and whether are they shifting from bond market to the equity space. It's hard for us to track, but I think judging from the current momentum that we see in the equities market, and we track it against the momentum that we see in the bonds market, there is a likelihood. And I believe that due to the weaker ringgit, things are looking a bit more attractive on the equity space. So I hope that answered the question for one of the viewers who asked the question on foreign bond selling and where do the money go. Okay, just let me go through other questions. Okay, what's the market outlook for SCPO in the future? I think in terms of the crude palm oil space, it's going to get a bit tricky. First of all, there's a few other elements that's in play this year. We have seen how tight was the supply for palm oil, especially late last year, and the impact is being felt even through this year. But obviously, for the past couple of weeks, we have seen prices decline because I think production is starting to recover after the severe El Nino. So I think this year is still a supply team, but it's not a positive supply team. We are looking at probably a recovery in production, and therefore production will pick up in the next couple of months. So that's actually there will be increasing supply coming to the market, but coupled with other factors, especially the demand factor, which are very concerned of, because clearly you can see China numbers are not that positive, not that great, and it's a long-term trend. We have seen that for the past couple of years, and if this continue, I think it's going to be a very concern. Coupled with that, I think EU demand for palm oil is actually going to suffer in near future because of the legislation that they just passed. So I think if you just look at overall market for CPO this year, it's going to be pretty mixed. In fact, we are actually not very bullish for CPO in general. Yep. So back to you, Sri.
All right, thank you so much, David. With that, I just wanted to conclude and share that we will be uploading this video on our YouTube channel. So I'll share the link in a follow-up email. So this way you can revise what we have discussed today. I'm so sorry we can't address the rest of the questions. We will look through the questions after the session and follow up with an email reply to you later on. Mr. Chandrasekhar, you have a question on whether we will email the link. Yes, we will send you an email with the link to the video, so rest assured you can revise what we went through here today. And thank you for being a wonderful audience. You were very lively indeed, and thank you so much, and have a good evening ahead.